Investors and depositors are alarmed by Silicon Valley Bank and Signature Bank's collapse. Shark Tank star Kevin O'Leary wasn't happy despite authorities acting fast to ensure the security of the cash. He told CNN, referring to U.S. Vice President Joe Biden, what effectively happened over the weekend was that he nationalized the American banking system. It's not a danger anymore. In any sense, it is no longer private. Now the government, eventually the taxpayer, provides financial support. O'Leary believes that this should alter how investors perceive the industry. When the president leaves in a few minutes, he will essentially be saying, "Look, I can't take this risk anymore. I'm just going to nationalize the whole thing," O'Leary said, adding that banks would become far less profitable as they became more regulated and concentrated. And it is not encouraging for investors. There is no such thing as a free lunch, and this will ultimately cost bank stockholders a lot of money. Never again would I invest money in bank stocks.
This is a combination, a powerful one, of idiot management with a board above them that was incompetent, or at least asleep at the wheel. Because what happened here was just plain bad management. To make the bets they made means they know nothing about banking. I hate to be so blunt, but that's a horrible combination. They blew themselves up the old-fashioned way. Idiots. That's the bottom line. And at the end of the day, they caused chaos in the banking system, and the outcomes now with new policy in place are not good. Because if you think about what's occurred here is we let one bank, and let's talk about the other option of letting that bank fail, okay? They blew themselves up, let them fail, what would happen? 95% of those assets, including the accounts that were not insured by the FDIC, that had more than 250,000, which was 90% of the accounts, were held by sophisticated investors, such as hedge funds and venture capital firms. They're big boys. They understand risk mitigation. And either they were or they weren't doing their jobs. They would have got back 95 cents on the dollar. And then for everybody that had 250,000 or less, they would have got all their money back. Now, the big discussion was, okay, has this breached confidence in the entire U.S. banking system? And I would have argued it would have been volatile for a few days, but this was not a 2008 Lehman Brothers situation. These are just idiot bankers with an incompetent board. It's that simple. Now, we should have let that wave go right through onto the beach and come back in. That would have been fine. But instead, we're sitting in a horrible moral place today where every single account in every single bank, regardless of who's running it, is guaranteed by the taxpayer. I'm not happy with the outcome.
Hello, Kazillionaires. Do you enjoy this video so far? If so, don't forget to click the like button. Subscribe and click the notification button if you want more daily updates on building wealth, personal finance, and achieving financial independence. Now back to the video.
So what does Mr. Wonderful do with his money then? Dividend stocks. O'Leary is a proponent of buying dividend-paying stocks. In an interview with Forbes, he stated, "When I started to do some study, I found out one amazing statistic that altered my investment attitude forever. Dividends, not capital gains, accounted for 71% of market returns over the past 40 years. Therefore, my first rule is that I will never own anything that doesn't provide a dividend." Here are the top 2 holdings at O'Leary's flagship ETF, Alpius O'Shares U.S. Quality Dividend ETF, in case you share the same opinion. Microsoft. Although software giant Microsoft, MSFT, is an exception, tech firms aren't often recognized for paying dividends. In September 2022, the business will boost its quarterly dividend by 10% to 68 cents per share. The dividend for each quarter has increased by 62% over the previous 5 years. Microsoft offers a 1.0% yearly dividend yield at this time. The yield might not seem like much, but with a weighting of 5.26%, Microsoft is now O'Leary's OUSA's largest position. The year 2022 wasn't kind to tech stocks, and Microsoft was also affected by the sell-off. Shares have decreased by 8% during the last 12 months, but things are going well for business. Revenue grew to $52.7 billion in the December quarter, up 2% from the same period last year. Revenue increase was 7% on a constant currency basis, which is far more spectacular. Microsoft may offer skeptic investors something to consider given the decline in its share price. Home Depot USA's second largest asset, Home Depot, HD, represents 4.82% of the weight of the fund. With over 2,300 locations and an average indoor shop footprint of 105,000 square feet, The home improvement retail giant dwarfs its rivals. While many physical stores struggled during the epidemic, Home Depot had a roughly 20% increase in sales to $132.1 billion. And when the economy started to recover, the firm kept growing. Sales rose 4.1% year over year at Home Depot in its fiscal year 2022, while profits per share jumped by 7.5%. The business increased its quarterly dividend last month by 10% to $2.09 per share. It returns 2.9% at the current share price.
Don't forget to click the like button. Subscribe and click the notification button if you want more daily updates on building wealth, personal finance, and achieving financial independence. And remember, the world is yours.